Hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, we're going to talk about how do you become a profitable swing trader. So I'm going to talk about what are the things that you should follow and what are the things you should avoid. And also I'll explain what are the major advantages with swing trading. And finally, I'll focus on three major principles that you should follow with swing trading that is definitely going to help you to become better at swing trading. So with swing trading, the major thing is you check your own trading logs. Whatever the trades that you would have taken with swing trading, you can go back and check it. When was the last time you made significant loss? So if I ask that, everybody would precisely remember even the date when they've lost significant amount of money, because the money that you're losing versus the money that you're gaining, psychologically, it haunts. When you specifically lose a significant portion of your capital, it will go and sit in your mind forever, and you tend to avoid that mistake when the same kind of opportunities arises again. So it is more than the analysis going wrong. What has actually led to that significant loss is the number of quantities that you have bought during that trade. So it is nothing to do with analysis. Everybody can be bad with analysis, and everybody can be good with analysis also. But what segregates a profitable swing trader versus unprofitable swing trader is the number of quantities they buy in each and every trade. So they specifically decide what in case if this trade goes wrong before taking every trade. So when you ask yourself what I'm going to lose, how much I'm going to lose in this trade if something goes wrong, eventually you'll give importance to the money management principle. You'll give importance to the position sizing rules. So always give importance to the position sizing rules than the analysis. The analysis can go wrong or it can go right, but if it goes wrong, it should not break you as a trader. So for that, position sizing is primarily important. So let me explain with an example how you can follow a proper position sizing with respect to swing trading that can help you to become a profitable swing trader. So let's consider this scenario where we are focusing on with position sizing and without position sizing. Say you have a capital of 1 lakh. Okay, and let's first start with how most of the normal traders follow. Say if they have a capital worth almost 1 lakh, and say suppose if their entry price for a stock, say consider any stock, if their entry price is 500 rupees and if the stop loss is 450 rupees, say if the stop loss is it, they wanted to exit the trade. So what they'll do is they'll directly buy 200 shares. How they are able to buy 200 shares is this 1 lakh divided by the entry price. That is going to tell them how many number of quantities they can purchase. So it tells them that okay, you can purchase 200 quantity. So currently if the LTP goes to 450, which means that if the stop loss is hit, they are going to lose 10,000 rupees, which is 10% of their capital is gone if the stop loss is hit. So this is what most people will do. Now with the position sizing, you can decide how much capital or how much risk you can take from your capital, so that if the stop loss is hit, I do not want it to lose more than whatever the percentage. Say suppose I'm mentioning 3% here. Now if you could see, the number of shares that I can buy has totally gone down. It is not 200 shares anymore. It is 60 shares. So how do you get the 60 shares? It is based on the stop loss. You have the entry 500 rupees and you have the stop loss 450 rupees. So your overall risk is how much? It is 50 rupees, correct? 500 minus 450. So now you wanted to risk 3% of your overall capital. So 3% of your capital of 1 lakh is 3000 rupees. So how many number of quantities I can buy? All you have to do is divide this risk 3000 rupees by 50, which is the risk, that is going to give you 60. So you are going to buy 60 shares. That's all. So now when the stop loss is hit, currently if the LTP is 450, which means if it comes to stop loss level, you are going to lose only 3000 rupees, only 3%. So in both the cases, the analysis went wrong. The stop loss was hit. But the first guy lost 10%, but you lost only 3% because you are using the right position sizing. So this is why position sizing is more important than focusing on the analysis. So next comes what stocks to pick with respect to swing trading. See, with respect to swing trading, it should be focused just like how a fund manager focuses the mutual fund. So the main focus of fund manager is to diversify, right? So they don't invest in one single stock. Similarly, for swing trading, instead of investing in just 1 or 2 stocks, you can diversify into, say, suppose 10 stocks. You are going to invest in 10 different stocks based on swing trading. So out of this 10 stocks, you can invest 4 stocks in large cap, 3 stock in mid cap and another 3 stock in small cap. This way your overall portfolio is diversified. So even with respect to investing or be it trading, in both the cases diversification definitely helps you out. Since you are giving a higher weightage to large cap, even if there are any wild swings that happens, if there is market correction that happens, you will not lose significant portion of your capital. And the second thing is, we always tend to focus on stocks which is hitting upper circuit. Say any small cap stocks or mid cap stocks will have certain upper circuits like 10%, 15% or 20%. When that is reached, you get more excited. Okay, my stock has hit upper circuit. But you have to think the other way around. What happens if market goes down? Similarly, just like how a stock is hitting upper circuit, it can hit a lower circuit also. If it hits a lower circuit, say suppose you out of 10 stocks, all your small cap and mid cap stocks, if it's a lower circuit, then out of 10, 6 stocks is going to get locked in lower circuit, which means that there won't be any buyers at all. You will be, everybody will be selling and nobody will be there to buy it. So eventually the stocks gets locked in lower circuit and you would not be able to exit the stock. So when you are not able to exit the stock, the damage becomes much higher. So in order to avoid this, when not only diversification, in which kind of stocks you're diversifying is more important. So always stick to stocks which are part of FNO, because when a stock is part of FNO, they do not have circuit filters. It can go up as much as it want, it can go down as much as want, and there will always be buyers and sellers, and you can always exit the stock. See, with swing trading, the key is not the entry, it is the exit. Based on the exit, your overall PNL is decided. It is not based on the entry. So if you're not even able to exit a stock at the right time by getting locked in lower circuit, then there is no use. You will definitely blow up your capital one day or the other by not exiting at the right time. So always focus on stocks which are part of FNO so that you would be able to exit at the right time. And also you don't need to directly invest in futures. What you can do is check out what are the list of stocks that are part of FNO and invest in the cash market. You don't need to put it in as futures, so that your risk is not proportionally higher by investing in futures. By check, say suppose if a stock is say Reliance, Infosys, TCS, all the stocks are part of FNO. You can simply buy these stocks in cash market so that there will not be any circuit locks for these stocks. So moving from what stocks to buy, now we are coming to when to buy. See, the precise time you can buy it on Monday, Tuesday, Wednesday, it doesn't matter. But if you have two different comparisons, a stock that is trading at all-time high versus a stock that is trading at all-time low. Similarly, a stock that is hitting 52-week high versus a stock that is hitting 52-week low. So this side, a stock that goes up has a higher probability of even going up much higher. So in investing principle, people always say buy low and sell high. But in swing trading, the wise thing to do is buy high and sell even more higher. That is the right way to trade. So by focusing on all this all-time high stocks or 52-week high stocks, what happens is the momentum will greatly kick in. So it is just like getting into a Vande Bharat a train. So what happens once it starts from a specific station A, it directly goes to station B or station C until the journey ends, the speed maintains. So it's not like a normal express where it stops in each and every place. So the momentum will not slow down. So getting into a stock like 52-week high or all-time high is just like getting into Vande Bharat. The moment the momentum kicks in, it can go past much higher. So always focus on stocks which is kind of a sleeping stocks. So it will be there for a prolonged period of time. It will not break out. But the moment it breaks out from 5 years, 10 years range, and then it starts moving up, then the movement could be exorbitantly much higher. So always focus on the stocks that are going up rather than the stocks that are going down. If you focus on the stocks that are going down, it can go much lower. So it will be just like catching a falling knife. So avoid stocks that are going down and focus on stocks that are relatively performing better than index. For an example, say suppose you are going to invest in Maruti shares or Mahindra and Mahindra, whatever the auto stocks. So out of all, you just focus on Nifty auto stocks and find out which stock from that specific index is performing relatively much better than index. Say suppose if Nifty auto index has given 5% for the last week, and if Maruti has given 9% for the last week, then Maruti has outperformed the index. So the probability of Maruti continuing to outperform is much higher in the next couple of weeks. So this is how you can pick stocks. Find out the stocks which are hitting all-time high and all-time 52-week high or all-time high, and check if those stocks are relatively performing better than the respective index, and then invest in it. So once you get in, you can just rebalance the overall portfolio on a weekly basis. Say suppose every Friday you do this analysis, and on Monday morning you buy it, and then you Friday evening you just exit it, and repeat the analysis again on Friday evening, and do the same investing or the swing trading part on Monday morning, entering on Monday, exiting on Friday. So your overall holding period will be just 1 week. By reshuffling every single week, you would be able to get in and get out with every specific stocks, and you don't need to focus on any kind of daily analysis, because the biggest advantage with swing trading is it works beautifully for working professionals, because you don't need to sit in front of a system and monitor the charts going up and down. All you have to do is focus on stocks that are relatively performing much better than their respective index. Get into that stock using the position sizing rules which I have mentioned. Just follow the number of quantities which you need to buy, get in and just hold it for 1 week, and get out by Friday, noon, or Friday. By the time market is closing, you can just exit it and repeat the exercise again. So this way you have a proper swing trading mechanism with very minimal time that you're going to spend in analysis. So let me show you with an example. Once you get in, how can you trial the profits and exit it? So consider this stock, which is BPCL, where you can clearly see the stock has broken out from the a very long period of ranges, where from 2020 high is broken, where for a long period this high was not broken, and finally that high was broken. 548 levels was broken, and once it was broken, it starts moving up. So now we know precisely when to enter. See, more than that, I have selected weekly time frame. So for swing trading, it is always to start with at least weekly time frame or monthly time frame, so that you can avoid the daily noise. If you select the daily time frame, there will be a lot of ups and downs and a lot of swings that would really confuse you. So always go and select a minimum of weekly time frame and check where the all-time high is. If that all-time high is crossed, then that is going to be your entry zone. So you would have bought around this specific candle close around 558 you would have bought, and the stock is currently at 622. So once you've bought, you can simply apply a super trend indicator here that is going to trial your profits. So as you could see, so the super trend has given already a buy signal here, but we don't need to be worried about it, because we are going to enter only after it has given a all-time high breakout. So we have given it has given a breakout here, and as long as the stocks keeps moving up, the super trend will also keep trailing the profits. So either you can hold it for 1 week and exit it, or if you wanted to hold it for a longer period of time, you can apply this trailing principle using super trend. So here's another example of force motors, where you are able to see there was a long time consolidation here, where the range was broken at around this level. Around May 2023, the range was broken, where on a weekly time frame, the complete range for almost 2 to 3 years, where the force motors was under the narrow range. And once that was broken, you can clearly see how much high it has moved. From 1700, it is currently at 6885. It has gone up tremendously. So consider if you are a person who is keep tracking the all-time high price, and the moment it crossed, if you are entering it here, and you would be able to trail the profits to a greater extent. Even if you apply super trend, you would be able to see that it would have not given a sell signal at any point of time. Even during this down move, it has not given a sell signal. So from 1700, you would have ridden the trend, you would have been able to ride the trend completely till 7,000 rupees. So this is the kind of move you can make with respect to swing trading. So either you can rebalance it on a weekly basis, or if you find just 1 or 2 stocks like this, and if you hold it for a prolonged period of time, you would be able to capture much bigger moves. So these are the major principles that you should focus on to become a better trader with respect to swing trading. So I'll see you guys next week with some other topic. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.